From the sidelines of the Motilal Oswal 20th Annual Global Investor Conference, our colleague Nimesh Shah caught up with Sundararaman Ramamurthy, Managing Director and CEO at the Bombay Stock Exchange. Exchanges, of course, are right at the heart of this big bull market that we are seeing. He began by asking Mr. Ramamurthy about the draft paper from SEBI on the F&O segment as the deadline for seeking public comments ends today. Listen in to what he had to say on the paper and, of course, on the company's outlook for scaling volumes going forward. Take a look.
There are some views in the country, across the country in some places, that the volumes in equity derivatives market in India are slightly very high, and there are retail participants who are losing money, and there is a crowded volume on expiry days. So the regulatory intervention is to sort of address these concerns. And naturally and necessarily, therefore, they are meant to have an impact on the volumes and the participation levels.
Sure. Have you heard from the regulators so far on what the thought process is? What kind of data has been asked by the exchanges to submit as far as the volumes in the derivatives is concerned, which has been a bit of a concern for a lot of politicians, government officials, as well as regulator?
So the regulatory process in India has always been a process of co-creation. So before the entire draft paper came into circulation for public comment, SEBI had an expert working group where significantly large amount of data pertaining to various aspects of derivatives trading were discussed. Post that, the outcome of the expert working group was taken to the Secondary Market Advisory Committee, post which the paper is published. So tomorrow is the last day for public to provide comments on the paper. Our understanding is that regulators will collate all the necessary, all the comments, and based on which they will decide which one will go, which will not go, how modified it will go, and all that stuff. And after that, they will have their own internal approval process, post which the final circular will come out.
Sure. So, any deadlines, sir, in terms of timelines on by when you expect the final circular to come from regulator?
On the final outcome, I don't have the deadline, but the public comment tomorrow is the deadline.
Sure, sure. Sir, a lot of analysts believe that removal of bank eggs can impact the EPS for BSE by 10%. Is that a fair assessment? And what is your thought process in terms of whether bank eggs can get removed by the regulators?
First, 2-3 points here. I do not know what is the impact on EPS because the MIIs, we work on a very different pedestal in terms of how do we service the investors and how do we service the market. And the regulatory effect is not to remove an index. The regulatory effect is to say you should not have more than one weekly expiry. So BankX, if it is not the index which is for weekly expiry, because regulators have talked about one benchmark index. Benchmark means it should be only Sensex. So by that interpretation, BankX will not get removed. It will become a monthly expiry.
Got it. But the other way to look at is that in that scenario, BSE will actually benefit because the other exchanges far more indices which are in the F&O. If those goes removed and it's only monthly, as you explained for bank eggs, this will mean that a lot of volumes can shift to the BSE Sensex. Is that a fair way to look at?
No, the way we are looking at BSE is this. As you know, we just very recently started this product. The way we are benchmarking ourselves is against ourselves. Like if yesterday I am performing X, how do I increase it to Y? If yesterday I had one product, how do I increase it to multiple products? So honestly, that is the way we are benchmarking. So going forward, what we will do is, we will be striving hard to create monthly volumes, more monthly products, and therefore we are already venturing on investing into technology, infrastructure, people, etc.
Sure. So in that case, what is the market share currently for BSE in the F&O market, and what's the aspiration goal or the number that you're looking at in FY25?
When people ask me about market share in derivatives, I tell them it is 100%. I'll tell you why. Because if there are same products between two exchanges, it is fair to put a market share. When the products are unique, how do you club all the unique products together and compute a market share? So I typically jokingly say my market share is 100% in my own products. But having said that, currently I understand out of the total contracts traded, the volume traded, BSE is trading 20% in overall. We have not put ourselves a target in terms of value here because we have unique products. We have always been putting ourselves a target in terms of number of products that we have, number of market participants who trade with us. If you recall, we started with hardly 8-10 people. Today we have around 400 plus people who have registered with us and who trade regularly. We want more people to come in. We want more investors to come in, more FPIs to come in. That is the way we are measuring our success.
Spoke about the F&O market, but what about the cash segment? Even there, it's been lacking to the competitor, but there has been some initiatives that you have already done. If you can talk about the cash segment, what the BSE market share currently is, and what are the things that you are looking to do or add in that space? Very
valuable question. If you recall, when we started, we had around 5 to 6% market share. Today, we are having around 7 to 8%, sometimes 9% market share in the equities market. But more than the percentage, the base itself has grown in a big way. Compared to around 6,000 odd crores on a per day basis, we do around 9,000 odd crores on a per day basis now. One of the most important, or rather two of the most important points to note there is, the capability to do product differentiation in equities is very limited. So what we can do is only service differentiation, which we are already doing. The second is lack of institutional participation in equity segment of BSE. So traditionally, the FPIs never used to trade other than block deals at BSE. Block deals, they used to come to us because of the inherent advantages BSE had been providing for a long time now. In the secondary market normal segment, the participation was not happening from FPAs mainly because if their brokers, they don't give instructions to the brokers to go to which exchange. But typically brokers used to punch in one exchange because at the end of the day, FPAs required a single contract note. They didn't want for a single order multiple contract notes. So this was a problem in existence. Fortunately, this has been rectified now. SEBI has made it mandatory. It's mandatory now for both the exchanges to provide in both the segments a single contract note for institutional participants. It has to come into work from October. So we are putting all our efforts to ensure the custodians and others are fully geared up for this change. Once this happens, we think that we will be able to attract some amount of FPA volumes along with it institutional volumes. So that should improve our situation in equities market.
Sure. So the other big growth engine for you has been the Star MF. That platform has done really well for BSE. Any plans to monetize some value or unlock some value in Star MF going forward?
If by question of monetization you feel whether we will be selling it across, no, the approval has been given to the exchange, so it is part and parcel of the exchange. There are other areas where we can improve our performance in mutual funds. You may be aware that we have already embarked our journey on version 2 of our system, and it is going live. It's already gone live on a test basis. On a full-fledged basis, we will be completing that by end of this year and sunsetting the older system. I'm sure you're aware already on a monthly basis we are touching new highs in terms of volume processing. We process around 5.25 crores of orders per month now. Out of the 3.8 crores is actually SIPs. We are very bullish on mutual fund segment because compared to the entire population and various numbers and paradigms, I think we have not even scratched the surface in respect of mutual funds.
All right, that is the top management of the Bombay Stock Exchange sounding quite bullish on the mutual fund business, looking to grow more institutional participation. and looking at more monthly contracts, more product innovation on the F&O side to take their market share higher from the present 20%. Well, with that, we'll take a quick note with the news of the market.